Hello all. Today in this lecture we are going to discuss something about taxes. Following topics will be covered in today's lecture. Introduction about taxes, 7th schedule of Article 246. What do you mean by taxes? Difference between direct tax and indirect tax, and lastly we will discuss the features of indirect tax. Starting with the introduction, as we all are aware about the Constitution of India. So we can say that Constitution of India has the right to collect and levy taxes, which means our Constitution can impose taxes on the general public. There are various articles in our Constitution. In this lecture, we will be talking about Article 245 of the Constitution, which states that in our Constitution, there are only two bodies who holds the power for enacting laws. The first one is Parliament and second is Legislature. Now the question arises, what is the role of the Parliament and what is the role of the Legislature? So we can say that Parliament make laws for the whole or any part of the territory of India, whereas Legislature of the state can make laws for the whole or any part of the state. But over here you have to keep it in mind that if Parliament makes any laws which will not be considered as invalid. Next is Article 246. Article 246 gives union and state government rights for levying taxes. Over here, whenever we will be talking about union government, it means our central government, and state government. Whenever we talk about state government, it means state as well as union territory government. Now, in this article, there are various schedules, but we will be talking about only 7th schedule of the Constitution. In 7th schedule of the Constitution, there are three lists. List 1, which is known as Union List, List 2, which is known as State List, and List 3, which is known as Concurrent List. Again, the same question arises, what are the role of these three lists? So let's understand the role of these three lists. List 1, which is also named as Union List. So in this list, all the matters in respect of which Parliament, over here Parliament means central government, has an exclusive right to make laws. So in list 1, all those matters will be discussed where the Parliament can make laws. The list 2, which is also named as State List. In the State List, it contains all those matters in which the state government has an exclusive right to make laws. And lastly, list 3, which is also known as Concurrent List. In the Concurrent List, it contains all the matters in which both the state government as well as central government has a right to make laws. Now let's understand what are taxes. What do you mean by taxes? Do you think tax is a burden, or do you think tax is a penalty on the general public? But if we talk about taxes, taxes is not a new term. Taxes are there in the olden era also. When the dynasty was there, at that time also, king charges the taxes from the general public. So we can say that taxes are the source of revenue for the government. Government charges taxes from the general public, but all these taxes which are collected by the government is spent on the general public in the form of providing education, building roads, or giving the health facilities to the general public. If we talk about different taxes in India, there are two types of taxes. One is direct tax and Second is indirect tax. Direct tax means when the person directly pays the tax to the government, and indirect tax means when there is some intermediary between the person who pays tax and the government. Which means person who pays tax, he pays tax to some other person, and that person has a responsibility to deposit tax to the government. Let's understand this concept in detail. Over here you are seeing the diagram where I have divided the complete diagram in two parts, direct tax and indirect tax. Over here in direct tax, the ultimate burden of tax and responsibility to pay tax falls on the person, and he directly pays the tax to the government. For example, we can say income tax. Suppose you are a salaried person and you are getting the salary. So, over here it's your responsibility to pay tax to the government. So, you will directly deposit the tax on the amount on which you are earning to the government. It means that the burden of the tax is also on you, and the responsibility to pay tax is also on you. Or let's take some other example. You are a company and your final accounts, that means profit and loss account, shows the profit. So in that case, company is responsible to pay tax to the government, and the amount which is to be paid to the government is the burden which falls on the company. So it is known as corporate tax. So income tax and corporate tax both are direct tax. If we talk about indirect tax, in the indirect tax, burden to pay tax is on the purchaser and responsibility to pay tax is on the shopkeeper. For example, you go to the ice cream parlor and purchase some ice cream. So whenever you are purchasing the ice cream, you have to pay the price of the product plus some tax on it. So you are paying tax to the shopkeeper, and then shopkeeper will deposit it, the collected tax, to the government. Over here, the tax is paid by the consumer but deposited to the government by the shopkeeper. So shopkeeper holds the responsibility to pay tax, but the purchaser holds the burden of tax. So purchaser is going to pay tax. Purchaser over here will be the end consumer. So we can say that whenever you buy stuff, the shopkeeper is responsible to pay tax, but he can collect it from you. Hence, the burden of paying tax is not on the shopkeeper, it's on the end consumer. Example is GST. GST is a newly introduced tax in India which was introduced on 1st July 2017. GST is known as Goods and Services Tax. Let's understand it in more detail. If we talk about direct tax, we have already done that. In direct tax, the incidence of tax is borne by the person who pays tax to the government. But over here you have to keep it in mind that direct tax is progressive in nature. Progressive means as your income increases, the amount of tax also increases. As you are already aware that in India we have different tax slabs. As your income increases, your tax slab also increases and the amount of tax increases. Suppose you are earning rupees 5 lakh in a year, so you have to pay a less amount of tax, and if you are earning 10 lakh in a year, you have to pay more amount of tax. So as your income increases, your tax amount also increases. It is known as progressive in nature. Over here in this diagram, you can see that the taxpayer is holding the burden of tax. So he is responsible to pay tax to the government. Over here, the taxpayer cannot collect the tax from another person. Whereas in indirect tax, the incidence of tax is borne by the end consumer, but the responsibility to pay tax is on the intermediary. That means you can say the shopkeeper. Indirect tax is regressive in nature. Regressive means that everyone has to pay the same tax. It has no role with the income. Whether your income increases or decreases, you have to pay the same tax. Suppose you go to the market and purchase a biscuit packet. And let's say on the biscuit the tax rate is 5%. You purchase the packet worth ₹10 on which 5% tax is there. So you have to pay 10.50 irrespective whether your income increases or decreases. Hence, it is known as regressive in nature. Over here in this diagram, you can see that the burden of tax is shifted to the consumer. Shopkeeper is a taxpayer who is paying tax to the government, but he is shifting his responsibility of paying tax, or you can say burden of paying tax, to the consumer. He is charging the whole tax from the consumer. So, ultimate burden to pay tax is on the consumer. Next, we are going to learn features of indirect tax. The first feature is that indirect tax is charged from the final consumer of goods and services. Let's say over here you are a shopkeeper or a retailer. So you are going to sell goods and services to the end consumer. And whenever you are selling goods and services to the end consumer is going to pay the amount of goods and services plus tax to the shopkeeper, which means shopkeeper has collected the tax from the end consumer, and then our shopkeeper will deposit the collected tax to the government. So we can say that it is charged from the final consumer of goods and services. Next is collected by intermediary and deposited to the government. As we have already discussed earlier, that the shopkeeper is going to sell goods and services to the end consumer, and end consumer is going to pay the amount for goods and services plus tax to the shopkeeper, and then shopkeeper will be depositing the tax to the government. So over here, retailer or shopkeeper will be considered as intermediary who is depositing the tax to the government on behalf of end consumer. Next is, it is applied to all sections of the society, whether rich or poor. It is not like the direct tax. In the direct tax, rich will pay more tax and poor will pay less tax or no tax. But in indirect tax, this kind of progressive nature is not there. Now let's take our example. Suppose the rich as well as the poor went to the market to purchase a packet of biscuit. So both have to pay the same charges irrespective of income earned. If the packet of biscuits contain 1 rupee as a tax, so if a rich is purchasing, he also has to pay 1 rupee as a tax, or if the poor is purchasing, he also has to pay 1 rupee as a tax. So we can say that GST is applied, or indirect tax is applied on all sections of the society, whether rich or poor. But if we talk about direct tax, in case of poor people who are not earning, they don't have to pay tax to the government. Next is raise the price of the product on which it is imposed. Now, whenever we go to the market to purchase goods or services, first of all, the seller will calculate the cost of its product or service and then add the profit in it. Once the profit is being added, he has to pay tax to the government, so he will also add the tax which he will charge from the end consumer. So we can say that selling price of a product will comprise of cost of the product plus profit charge plus GST, which is the indirect tax in India. Now, the question arises how the price of a product increases. Suppose the government charges 10% tax, but after a month, government increases the rate of taxes. So if the rate of taxes are increased, it's obvious that the selling price of the product will also increase. Let's take an example. Let's say the cost of a product is 9 rupees. The owner of the product charges 1 rupee as a tax. So he is willing to sell the product in the market for rupees 10. But since the government has imposed taxes, so he is liable to charge tax from the end consumer. Let's say the tax rate is 10%. So he will charge 10% of 10 rupees from the consumer. 10% of 10 rupees is rupee 1. So the selling price comes to be rupees 11. After a month, government increases the tax rate. Let's say the tax rate is 20% now. So the shopkeeper will charge 20% on 10 rupees, which comes out to be rupees 2, and the selling price will be rupees 12. And hence we can say that the price of the product increases due to the indirect tax. Next is, it includes ad valorem tax and specific tax, of which ad valorem is charged on VAT or GST is proportional and specific tax is fixed. Whenever we talk about ad valorem tax, it is based on percentage. For example, the product is of rupees 10 and government says the tax rate on such product is 10%. So we will charge 10% of the price. If you are selling the product worth rupees 10, you will charge 10% on rupees 10, which comes out to be rupees 11. So whenever the tax is based on percentage, it is known as ad valorem. But whenever the tax is based on either length or quantity, it will be considered as specific tax. Now over here, if we talk about cigarettes, whenever you will see the tax amount on cigarettes, it's always charged on the length of the stick, irrespective of the value of the product. Over here, the tax is fixed. So whenever the tax amount is fixed, irrespective of the value, it will be named as specific tax. In ad valorem tax, when the price of the goods increases, the tax amount also increases because it is based on percentage. But in case of specific tax, if the amount of the product increases, the tax amount does not increase. Next is, it falls both under central and state government depending upon the specific type of tax. For example, VAT is levied by the state government, whereas CST is charged by the central government. But now GST is charged both by state and central government. Before the introduction of GST, in India we have different kinds of taxes such as VAT, which is named as value added tax, CST, which is named as central sales tax, service tax. So before introduction of GST, different kinds of government charges different tax. VAT was charged by state government and CST was charged by central government. VAT was charged when the goods were sold within the particular state or union territory, which is known as intrastate sale. And CST was charged when there was are dealing between two different states. That means buyer is in state 1 and seller is in state 2. So it is known as interstate sale. So whenever interstate sale is there, CST is charged and that amount of CST goes to the central government and amount of VAT goes to the state government. If I talk about current situation, petroleum is not covered under GST right now. So if you go about the prices of petroleum, you will see that every state has different prices of the petroleum. The prices are differentiated between different states is just due to the VAT. Right now also on petroleum VAT is charged and every state has a right to charge the different amount of VAT from its consumer. So hence the tax amount changes. But after the introduction of GST, the problem of state government and central government is demolished. Now, whenever you purchase the product and whatever tax is being collected from that will be distributed among both the state government as well as central government. So we can say that after the introduction of GST, state government plus central government has a right to collect taxes. Over here, we comes to an end of today's lecture. In the next lecture, we will be meeting again with some new concepts of indirect taxes. Hope you have understood the today's lecture. If you have understood, don't forget to subscribe, like and comment. Thank you.